last week of March review, Monday 23rd through Friday 27th, 2026. We had this down candle on the weekly time frame. It was a bearish week. Something I'd like to talk about is how price has been using the new week open gaps of the previous weeks to trade up to the high, of the previous week's new week open gap, and then sell off. Did the same thing with this week, did the same thing with this week, did the same thing with this week. And I'll drop down to the daily time frame. Some levels that were salient to me. First thing I was looking for was some type of retracement at the start of the week. So price, the week opened lower. We had the retracement, the whole retracement I was looking for happened on Monday. So it was a tricky one, and I wasn't pressing for lower prices. I just wanted to see price stay within the high it made on Monday and the low it made on Monday. But price used the previous week's range gap as resistance to send price lower. Monday's candle, Tuesday's candle, Wednesday's candle, Thursday's candle, and Friday's candle. On Thursday's candle used the high during the session, the AM session, as an inversion to go for these lows, and Friday used the London sessions high to go for these lows. So that was interesting to see. I dropped down to the 1 hour time frame. On Monday I was still reading price action after this large move. I did not take any trades. And I had the large open range gap here. I'll toggle to the regular trading hours in a bit. And yeah, on Tuesday stopped at Monday's open range gap low here, traded back higher. And Wednesday, I was watching Wednesday. I wanted to see Wednesday reach for this 8 a.m. high, but it failed to. These were the signs of the bearish price action. It was failing to trade above the previous week's high. I was watching it live and it was interesting to see, but because I had this bias of wanting to see price stay within this range, so my plan was if price would trade to this high here, I would try to send it down, while if price was at these lows here, I'll try to send it up just to stay within this range till next month. And on Thursday we had this high, went to this high here. On Thursday I took long positions at the beginning of the session because I was using that logic of this being the high and this being the low. So at discount prices, I took the high, took my partials here, and there was an open range gap here that price failed to fill. I think it stopped at the 25% of it, sold off, and we had Sunday do this, Friday do this. On the ES on Thursday, I was watching. There's an SMT here that made me go long with NQ, but I was watching this high to see if they'll take out this high, but price failed to take out that high. I did not know what to do with that at that moment, but in hindsight now, price used that level to sell off. I talk about I'll drop down to the 5 minutes. I'll put on my execution settings. I think I'm on the wrong shot again. Wednesday's price action. There was an open range gap from this high. Let's go to the regular trading hours here. Yeah, there's an open range gap high from open range gap from this low, from this high to this low, and price stopped at the 50% of it here. Then started pressing higher, and I wanted to see if price would reach for these highs. I took it long here, and I got stopped out break even here with one contract. I was wanting to see price reach for these highs at 11 a.m. in the morning. So this was the previous week's new week open gap that price was rejecting off. Traded back to it here. There was a first presented fair value gap on the 1 hour, on a 1 minute time frame here that price also used to sell off. Price traded to this low. These were signs of bearish price action. On Thursday, after the pre-session sell, I was watching this low here as the discount part of price action. So what I wanted to see was price filling this open range gap after taking out previous sessions low. So price took out previous sessions low, had an SMT with ES. Then I went long, added on that one long position at the first fair value here. Then I took two contracts off at the 25%, and at this point I bought two more contracts because I wanted to see price use the high of the new week open gap as support to send price higher, complete this range here, but I got stopped out. And that was it for me for the rest of this session. On Friday, price opened, sold off, found support here, sold off, did not trade back into the open range gap. I'd like to share my 1 hour chart. So it was Monday's price action, Tuesday's price action stopped at Monday's, Wednesday's price action, and sold off. Monday's price action, this high here on Friday's, regular trading hour session was taken out on Monday for the ES, and that was the high of the week. So I should go to the ES and compare that. This is the high, sold off. These are signatures of bearish price action for the week. Let's all go back to my electronic trading hours. So going into next week, I'm expecting bearish price action, but I'm also mindful of how far we've retraced, we've sold off so far for the month. So even if I'm expecting bearish price action, I am wanting to see what price does with the highs, and I'm predominantly watching this time frame. YM, the same thing. DXY. Because I did not do anything on Monday, I didn't do anything on Tuesday, and this was my first trade on Wednesday. Break even trade. Then these were my entries on Thursday. First three trades I partialed, and the last one I took a loss. And that's it for this review.